Greetings and good afternoon, Keystone clients. This is your founder, Managing Director, John Higginson, with this special podcast. Obviously, for those of you that have been watching or following what's going on over in the European Union and the impact of the United Kingdom making its plans known to separate from the EU, what does that mean for your portfolio? For those of you that have followed the markets or seen what's happened over the last few days in the markets, especially today, there have been extreme volatility as a result of the speculation regarding this. And then obviously last night with the vote going through, today the markets have been tumultuous. I mean, as I'm recording this right now, US stocks are down between 3 and 4%, and actually international stocks are down between 7 and 9% in the international area. So what does this mean? Most importantly, what does any of this mean for you and for your portfolios, and what are we doing about it? And so I want to give you a little perspective. I want to provide you some coaching and some encouragement today as to what we're doing regarding this and what you should be thinking about, where your mindset should be related to this. So sometimes we think about this volatility in a day and we say, well, 3 or 4% in the US markets, 7, 8% maybe it'll close at in the international markets. I mean, this is unprecedented, right? Like, we've never seen this before. And actually that'd be untrue if you thought that. For those of you that can remember back as far as Black Monday, right? In 1987, we had a day where the S&P 500 was down over 20%. Over 20% in one day, the market dropped. Imagine that. I mean, we're down 3 to 4% in the US markets. We're down 7 to 9% in the international markets. That's not 20%. And to give you some perspective on this, 1 year and 1 day later, all of those losses had already been recovered from Black Monday. Meaning if you went down the 20%, over 20% that day, and you just hung tight, you didn't even rebalance. You just hung tight. You didn't buy more, but you didn't panic. You didn't sell off. You just hung tight. 1 year later, to be exact, 1 year and 1 day later, you had recovered all of your losses. Because the fortunate thing for us is that although there's volatility in the market and losses occur and volatility comes upon us, it never stays down. So when we look at that, if you take now, October 31st, 1988, so about a year later after that, it was up 28% from the bottom. 3 years after the bottom, it was up 50%. 10 years after the bottom, it was up 445%. 20 years later, it was up 983%. And what are we up now as of today? We're up 1,669% from the bottom of that Black Monday. Specific to what's happening right now in the UK, most capitalistic economists here in the United States believe that this is actually a good thing. It's going to be a good thing for the global economy. It's going to be a good thing for the United Kingdom specifically. It's going to be a good thing for America long term. Our belief, obviously, if you believe in capitalism and what America's been built on, it's built on competition, supply and demand, free markets. The UK has decided, they are one of the fastest growing economies in the world right now. And they've determined that being drugged down and having over 60% of their legislation driven by over in Brussels, rather than their parliament, that they wanted to have more freedom. They wanted to remove some of the bureaucracy and get to more of a free market environment where they weren't drugged down by the rest of Europe. And so although this is what happens, when things like this are announced, this is what happens. Fear is encountered, a panic is what we do as investors, and the markets are very tumultuous during these times. But remember, the key is we're not looking at what is the market doing today or what is even the market going to do a year from now. You should be investing with a mindset of, here's my strategy for a lifetime. It's actually going to reduce tax in the UK long term. And their major economic exports and their biggest economic drivers are things that aren't going away. Remember, this volatility is just caused by panic. It's not actually a reflection of the true value, the intrinsic value of the UK and its economy. Things like aerospace, pharmaceuticals, financial services, IT and telecom. These are not things that are going away overnight. Those are the biggest revenue producers in the United Kingdom. So here's what I want to make sure I encourage you with today. Know that we're watching this, but here's the key. We've already planned for this in your portfolios. So first off, this is nothing new. This is called market volatility. It's nothing new. It's been happening for 90 years. It's a different topic each time. It's Greece going into bankruptcy. It's 9/11. It's dot-com bubble. It's 2008. But it's something different every time. But the same holds true. It's market volatility. Second thing is market prices are unpredictable and random. This happens. Number 3, none of us know which direction the next 20% move is going to be. Nobody does. Now, we can speculate on whether it's going to be up or down, but I can tell you that we know the direction of the next 100% movement, and it's up. It's always up. So we need to stay focused on that long term. Your portfolio with us is so broadly diversified. Right now, most of your portfolios with us, depending on your specific plan, you're in 16,000 companies in 45 countries. To lose everything would take a global extinction level type of event, not a blip on the radar like the UK stepping away from the EU. This is what you pay me for, to coach you through these scary times. I understand that it's scary. You read the headlines out there, you look at the media sensationalizing this. It's very, very scary, but remain disciplined and rebalance. Make sure we rebalance your account, because here's the thing. The last thing we want to do is now say, wow, there's a lot of volatility in the international markets, right? All of this information is priced into the markets as of today, and they're down 7 and 9% as I'm recording this. Why would we want to sell and lock in losses? Just like on Black Monday, why would you have wanted to sell and lock in those losses when a year later you'd already gotten all of them back? And that was a 20+% drop in a day. See, what we should be doing is you should be emailing me and calling me and saying, when do we rebalance our accounts? When do we get to buy more international stocks? When do we get to buy more UK stocks? Because this should signal opportunity, 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 not fear. When everyone else is running away from UK stocks in the short term and panicked, we want to remain disciplined investors standing there saying, we'll purchase your stocks. And that's exactly what we do in your accounts. Remember, on a daily basis internally, your accounts are being rebalanced. Every single day they're being rebalanced internally. And on a quarterly basis or an annual basis, depending on your type of an account, they're rebalanced from an account level as well. So when volatility occurs, you should think of it as this is an opportunity to buy low and sell high, which is exactly what all of us want to do with our investments. You see, you've already prepared for this. Most of you listening to this either have fixed income in your portfolio. You have maybe a fixed annuity. You have some money in cash. You're certainly not invested entirely in international stocks. And this is the reason why, this speaks to why diversification and broad diversification is so critical in providing safety. Because now all you're able to do is dampen the volatility by being properly diversified and having dissimilar price movement. And we can sell some of our fixed income when we go to rebalance that hasn't been affected at all by this, and use some of those strong dollars to purchase shares of international stocks when they're at a discount. When we're in this, it feels like it's never going to end. Whenever we're in things like this, right? 2008, it felt like it was never going to end. The market's more than doubled since 2008, but that seemed like forever, right? 15 months, the market almost dropped 50%. When stocks are running up, like the technology sector in the early 2000s, it seems like, well, why wouldn't we just buy those? This is the new thing. Technology's not slowing down. Well, we saw what happened with the tech bubble. When the dot-com bubble burst, a lot of people that were overexposed and under-diversified lost 60, 70, 80, 90% of their portfolio. A well-diversified portfolio was only down between 10 and 15%. You see, we've already planned for situations such as this. And if I encourage you to sell, I'm just destroying your long-term potential for success. See, financial organizations, they want you to do that so they can earn commissions and increase their profits by playing on your fears. All that's going to do is erode your long-term returns. It will make you feel better. Emotionally, in the short term, you'll be happy for it. But in the long run, it's only lining the pockets of the financial world and playing off of your emotions so that they can make more profits. This too shall pass. And those who panic and sell usually lose in the long run. So here's what we're going to do. We're going to ignore the hype, number one. I'm going to coach you, number two. And I'm going to continue to educate you through Myth Busting with Keystone Wealth Partners, our Saturday morning radio show on KTAR. You can download and subscribe to that podcast on the iTunes app. You can also listen to them through our website. I'm going to send out audio recordings like this. You know we do monthly coaching every single month. We offer several times that are available. And also, if you're unable to make it to coaching for your schedule and you're concerned about any of this stuff, call our office. Call into our office and talk with someone on my team to get an appointment scheduled. Because what we want to make sure we're doing here is helping you understand the way that you're positioned, the way that we've planned for this, so that you don't need to be concerned or filled with anxiety during times like this, but that you can feel confidence and that you can feel certainty in your strategy, because it's not if these times happen. We already know it's when they occur. And again, we've already planned for that in your portfolio. So here's what we're not going to do. We're not going to market time. We're not going to panic. We're not going to move your portfolio to cash. So don't even bother calling us. We're not going to, if that's what you're calling about, we're not going to do that. This is what you're paying us for, is to help you get through these times. So make sure you come to coaching. Make sure you listen to the podcast and the radio show. And again, if those aren't, feasible for you, absolutely call our office and say, I'm feeling a little bit of anxiousness about what we're doing. I mean, with all this stuff going on in the international markets, can Chad or John sit down with me and just go over my plan and talk to me about how we're going to rebalance and show me where some of my stuff is safer? We want to make sure that we help guide your behavior and your confidence in what you're doing, because that, as we always talk about, is going to have the biggest impact on whether you're successful with your money. It's not which direction the markets move over the next 6 months or the next even 6 years. It's how do you react to that movement in the markets is what's going to make you a successful investor. And it is absolutely my honor and my privilege to help guide you and coach you on such a meaningful, impactful part of your life. And I just want to make sure that I'm encouraging you that in the face of probably what's going to be a lot of media hype surrounding this to drive fear, I want to make sure you remain disciplined and confident so that you can get to the things that are more important in your life than the money that's in your accounts. Let us know if you need anything at all. Thank you for listening, and have a great weekend.